Real estate is a stable asset, and that's really one of the big reasons that we at Figure 9 like investing in real estate and multifamily properties in particular.
So why is real estate such a stable asset? Well, one of the big components to that is that the value is measurable and based on undisputed factors like cash flow and replacement value. So therefore, value is more predictable and consistent over time. It's not just based on perceptions of value like a lot of asset classes.
And on that note, when you look at real estate compared to public securities like stocks or bonds, the prices in stocks or bonds are typically based on two components. There's the fundamental value, and that's the same as real estate based on cash flow and the assets within the business. And there's the public perceptions of value. That's based on tangible and intangible investor sentiment. All of this adds up to create wild swings in stock and bond prices. Real estate typically only sees these types of wild swings when tangible metrics change, like jobs or population or other market-specific indicators. So these fluctuations can typically be predicted.
So real estate is just simpler. Investing in real estate is easier to understand than other investments. It's tangible, it's real, you can touch it, you can feel it. And I mean, think about this, try to go grab a handful of your favorite stock. Can't really do it. So changes in value typically happen slower and are more predictable, so you can see further down the road.
And with that, there's fewer variables or unknowns in real estate than other investments. Fundamentally, success in real estate really comes down to three main factors. That is the purchase price, the rents, and your operating expenses. Now, you can control the purchase price as long as somebody's willing to sell it to you for the price that you want, and you can control the operating expenses. Rental rates are a little bit more out of your control and at the whim of the market, but there's a tremendous amount of public data available for you to build your underwriting models around. Most other businesses and industries have to consider and manage many more variables. All of this adds up to help minimize the downside risk when it comes to real estate investing.
So real estate is a stable asset, and why is that? Well, the value is measurable. It's based on actual things. Real estate versus public securities. In public securities, you have investor sentiment to deal with as part of the value. In real estate, it's just a tangible metrics. Real estate is just plain simpler and it's real. You can grab a handful of the dirt that it's sitting on. And there are fewer variables and unknowns than other investments. So all those things add up to make it super stable as an asset, and that's another reason why we like it.
So I hope this was helpful in your understanding why we like real estate and why we think it's a very stable asset. If you have interest in investing or partnering with us, we'd love to hear from you. If you have other deals or opportunities you think would be a fit, please do reach out. And before you leave, hit that subscribe and the thumbs up, and we'll see you in the next video.
Talk to you soon.